Alrighty, welcome back to Weenie Trades. So unfortunately, I have a red day recap to go over, at least on the day trading side of things. There's actually a green day overall if we count the swing trade, but I really pride myself on day trading, so it's a little bit of a rough day for me in terms of the day trading side of things. And so a lot of it has to do with pride and ego. You're going to hear that a lot, and that's going to be a theme throughout this video. But there's going to be a ton of lessons as I go throughout my winning trades and losing trades. So be sure to learn from my mistakes so that you don't have to make them yourself. So each loss has a lesson, but sometimes there's just randomness to it. I can't control the market. A lot of these choices, though, where I place my stop, where my entry is, and why I entered, is going to be a big factor in whether the trade resulted in a green trade or a red trade. So let's get right into the video. Let's talk about Tesla, TSLA, up first. Oh, by the way, be sure to use the description for timestamps if you want to skip to a certain ticker. We're going to be talking about Tesla, BABA, Snapchat, Gamestop, AMC, BBIG, Zoom, Draftkings, and the way I traded them today, which was actually pretty poorly in some areas, better in some areas. But anyways, Tesla held yesterday's high as today's low. So yesterday's high, 730, today's low, around that 730, 728 area. We got a nice good rocket ride, and then we start to build a flag. And I start to accumulate into the flag, buying into the flag, stop loss just underneath the flag. We get a nice good push higher, peel off some profits. Yay! But then we started to come back in, and I started to give back some of those profits as Tesla's just chopping around. I was saying in the weekly game plan that 730 to 740 was my target on Tesla this week, and we reached that 740. So why am I trying to buy it looking for higher prices? That's a little bit foolish. So going back to the original plan is going to be very important. And Tesla, it's still a positive trade. Killed it on Tesla. Gave back a lot of money on Tesla today based off just out of nothingness, just chopping around. But what I did do is I reloaded a Tesla Leap. So what this is I bought the 1400 strike call and then sold the 1450 strike call. What's cool about this is I have about 2 years. I have 2 years for Tesla to about double. So Tesla double in 2 years. I think Tesla can reasonably double in 2 years. If it doesn't, oh well, I lose $490. If Tesla does double in 2 years, then $490 turns into $5,000. And that's because it's a $50 wide spread times by 100, because it's options land, boom, $490 into 5,000. Not guaranteed to in any way, shape, or form. Generally, whenever you 10x your money, that means there's a 10% probability that I'm going to actually even profit off of this trade. So that's just something to consider, but that's going to help me hold on to Tesla through this choppy volatility. So Tesla, bullish long-term, medium term needs to go sideways or even pull back a little bit more unless we're holding above, I'd call it 738. Then we could see Tesla into the upper 740s later this week. So that's Tesla. My worst trade of the day, or trades I should say, was on BABA. So BABA, nasty sell-off overall on the daily chart. But today we're starting to gap up, and I was thinking, hey, BABA looks pretty interesting, especially if it can break that 168 level. Because look, we have a pre-market high of 169, big gap up. Normally when you get a big gap like that, the short sellers have to cover and run. But in this case, BABA just didn't want to. And if we just take a quick look at the show trades tab over here, BABA, I just really got fiddled over here. So BABA, buying these dips, stopping out. Buying the breakout, stopping out. Buying the breakout one last time. This was one of those scenarios where it was like 3 strikes from my out. I really should have done 2 strikes and I'm out because BABA proceeded to then drop. Look, I am getting out near the highs, 168.20s. BABA went as low as 166. Doing that with 210 shares, yeah, that's gonna be a much more sizable loss than had I just cut where I did. So BABA gonna be a nasty expense trade. Oh well, shoulda, coulda, woulda, but I am still in this BABA Leap spread. So I'm really liking the Leap spreads, at least the risk to rewards and premiums for certain scenarios. So I bought this on the dip. BABA, $322 can turn into what? $1,500 because we take 210, the call that I'm selling, that's the -1, minus the call that I'm buying, 195. Boom, we get 15. And $322 can turn into $1,500. So that's about a 1 to 5 risk to reward. And the 1 to 5 risk to reward, they usually have about a 20% probability that I'm going to profit. But the skew is in my favor if BABA really starts to curl higher. And by March next year, if BABA's sitting above that 210, boom, I get to cash out my money. So BABA, we'll see if that leap trade can work out. Although the day trading side of things, maybe the right idea, but certainly thankful to have that stop out because I just saved myself about $1,000 almost, a little bit less than $1,000 by stopping out. So stopping out saved me my money. So in my mind, it was a good trade, but on the bad side of things, trying for it 3 times in the morning, it's just asking for trouble. So 3 strikes and then you're out. Maybe it's 2 strikes and then I'm out. Next up, we've got Snapchat, and Snapchat was a loser today. I was looking for Snapchat to break out, and I was targeting about the 76.40s area. Snapchat went on an absolute tear today, all the way up to 77.88. What a great move higher on Snapchat. That's what I was looking for off of this wedge break. So as you can see, we moved higher, lower, bull flag pop, back tested it, and as we started to curl higher, that's a bullish move. I'm going to buy Snapchat. And I bought Snapchat right there. We break out, snap right back in. Boom, stop out of half. And I really wanted to give the second half a lot of wiggle room because Snapchat was so bullish in my mind. But I guess I'm on a scalper's chart and some of the bigger moves are happening probably on the hourly chart. So if we look at the hourly time frame, the bigger moves are happening up here. And look at that, Snapchat, big move all day. So just an error in my part on either sizing and or the stop loss. If my size is less, my stop loss could be wider, but there's no telling if that stop loss would have got me anyway. So there's all these mental battles that traders can go through that I at least have with myself on, did I do the right thing? I think I did the right thing given the information that I had. Maybe the position sizing needs a little bit of work or the stop losses need a little bit of work. Let me know your thoughts on Snapchat because this one definitely got to me today. I was really looking for, that 300 share bulk order move, get that nice good move higher, but nah, Snapchat just did not want to get going. Still have the leap options on Snapchat, but we'll let me know your thoughts on the Snapchat trade. Next up, we got GME and AMC. So GameStop and AMC, I'm just going to kind of loop them together because they're kind of similar in terms of price action. But GME, in terms of what I could have done better on GameStop, I bought this over 217. I guess that's the fill at least. I'm trying to buy it at 216. But yeah, Thinkorswim, you get what you pay for, which is nothing on Thinkorswim. But anyways, GameStop, looking for the breakout. I'm looking at the pre-market or yesterday's high up there at 218. Looking for a move through 218. Buy it, instant slam down, stop out. Buy it, break, support, stop out. So the first trade, I think, was a little bit of a chase. I shouldn't even try to accept the trade if I'm going to be getting filled $1 late because that wiggles my profit. It takes away from my profit and makes me lose more when I'm wrong. Then again, the double stop out. At least on the third time, I was able to catch GameStop with okay size and peel some profits off in the 220s. But again, not even getting any off at 222. Stop loss break even nearly on the last piece. So GameStop, let me know what you think of that one. Let's check out AMC. AMC, really wanted AMC to get up into 37 this morning. So AMC, beautiful breakout. The best entry was right there at about 45. We broke out. Did a false breakout right there. Came back to the former breakout area. If you missed on the way out, you can catch it on the way back in. So 45 was, again, the dip buy on AMC. But then we started to curl, and we started to do a nice, good flag pattern. And I'm accumulating in the flag with a stop loss beneath the flag. Accumulating the flag, stop loss beneath the flag. At this point in time, I think this was the right move. At this point in time, I can't see what's to the right. I don't know if AMC is going to break out or not. Boom, AMC, stop out. It's a very small loss. Again, none of this is about the P&L. This is about the psychology that it does. It's a bit of a confidence killer when you have this many trades and they all kind of stop out. So I'm just kind of talking it out. Hopefully you guys enjoyed the YouTube video. AMC breaking out after hours. Really great stuff. So AMC just needed to diamond hand it through everything. Great breakout. Rejected a little bit off of supply at 47. They bought the dip, now pushing up after hours. If AMC can really get going, man, if AMC is closing above 47, we could see a second squeeze. However, there's still a lot of resistance up there at 53. So if AMC is above 47 to 48, we could see AMC probably at about 53 or a little bit higher, but 53 is going to be a big trouble area. And then, just looking at GameStop on the daily chart, we are starting to break the flag pattern. So GameStop could be curling up. If GameStop's over, 224, 225, we could get another squeeze in GameStop. So pretty interesting stuff on the GME AMC front. Next up, we've got BBIG, and BBIG was an expense trade, and I was looking for BBIG to potentially squeeze at some point in the day because it was coming off really oversold into support. So this is kind of a demand zone that I have for BBIG. So anywhere in this area could be considered a dip buy with a stop loss just underneath the lows, which would be 5. So BBIG went as low as 551. Then we started to move higher. And what I was seeing at this point in time is I was seeing a support level. Look at this. We hit this resistance. We top out. We sell off. We start to put on higher lows. Yay, we get above that resistance. So now it can be some support. So I'm buying BBIG off of support right over here. And we start to break support, quick stop out. So BBIG, net, an expense trade. But I was looking for something of a squeeze. I was targeting about the 8. So I'm buying here at 650. Stop loss just right underneath it, 10 penny stop loss. And here we go. BBIG starts to take off later in the day. Oh, well, shoulda, coulda, woulda. BBIG did a nice, good rounding pattern. This is similar to AMC, where if I can't see what's going to happen to the right, I can't see that there's going to be what's going to happen next. So this is what it looks like to me. I see that. Okay, yep. Great area to risk off of. Oh, okay, let's pull it to the right. Oh, geez, I can't even see it. Anyways, BBIG initially sold off, continued higher. Where's BBIG headed? Well, if it can hold above 8 and 820, it's likely, first of all, based off these ranges, we're expected to go sideways for a bit. But if BBIG is curling upwards and getting above 9 and /920, BBIG could do another squeeze. I know the small caps are starting to go off a little bit more, which is great to see. Love the momentum. With greater volatility comes also greater risk. So that's another thing to consider when we're trading these stocks. But BBIG, interesting to follow up with it. Congrats to those that held through and got the squeeze on BBIG. Next up, we've got Zoom, and if you watched Sunday's game plan video, I was saying Zoom looks pretty bearish, and I've been talking about Zoom bearishness since 400, but even before the earnings report, I was saying Zoom, probably not the best. Now, I don't know that Zoom's going to gap down. Obviously, in hindsight, yes, I would have loved to have bought puts or shorted Zoom beforehand, especially since I'm thinking it's going to go down. But anyways, that's just going to cause more mental craziness. Anyways, ZM tried to short Zoom on the pop and then just barely stopped out. So was expecting Zoom to go lower. Zoom did go lower for the rest of the day. Look for Zoom to get absolutely clapped, but usually after a big gap down like this, they usually go sideways, but I wouldn't be surprised to see Zoom down there in the 230s in the next coming weeks and or months. That's just my opinion. Otherwise, if it does move higher, I'd love to short it, potentially at 317. Or the gap right about here, 331, that latest pivot. And then lastly, of course, the gap at 348. So that's something to consider. ZM, bearish. Right idea. Wrong stop placement. Lastly, we've got Draftkings, and Draftkings was covered in the weekly game plan. It was bullish over 60, and that's what I said. I love Draftkings over 60. As long as we're above 60, I am going to remain bullish. We moved higher. We did a nice good pennant, but we went right back inside the pennant, and that's probably because it's a little bit extended on the daily chart. So Draftkings, was this probably the best trade? Yeah, probably not. I would say Draftkings could do a little bit better. And why is my show trades not popping up? There we go. Draftkings. So Draftkings had a great good dip and rip setup. The real breakout was over 59.79. I think I was a little bit late, but I did buy the dip right here at about 60.11 right there, buying the dip. Stop loss goes right underneath that pivot. We get a little bit of follow through. I'm like, something's not right, especially when you get a tail candle like that. What I like to do is I like to buy with my decent sized position. I usually am looking to add, but at least I know when I'm up this high, I don't want to be adding as much. Peel off a little bit of profits. What that does is it gives me some space that I can loosen up my stop loss to give the trade a chance to work. And Draftkings moved higher, pulled back, started to move higher, snap back down, quick stop loss. Shoulda, coulda, woulda. But DraftKings, still bullish above 60 and neutral / slightly bearish beneath 60. So a lot of stops were hit today. Just a lot of shenanigans. It happens, So, a lot of stops hit. Nobody to blame but myself. It's not the environment for tight stop losses or trailing stop losses or position building, which those are my, bread and butter. And so what I'm going to do is, maybe branch out. I'm trying not to go too crazy and think, okay, well, I want to change my strategy because my strategy is proven to make money over a long period of time, over multi-months and years. But what happens if it's been a couple weeks where the strategy doesn't work, a couple of months? It's really tough to keep a strong level head when this is the main income source and you're just kind of trying to crank it out. So just kind of me venting, talking. Hopefully you guys enjoy. Again, I'm all open for feedback. I always appreciate and value what my subscribers have to say. Maybe not so much random people on the internet, but so I like to give everybody a consideration. Again, though, it's not the money in terms of this red day and day trading. Overall green day, I guess, which it feels like a red day. But even then, it's not the money. It's just a tough pill to swallow to admit, like, hey, I'm not making money day trading right now. What does that mean? Does that mean I'm not a good day trader? Maybe I'm not a good trader today. Maybe I'm not a good trader that's last week. Maybe I'm a good trader over a couple of months. Anyways, check out the course. I'm definitely going to need it after a red day like this. And you don't get many people promoting their trading courses or stock courses after a red day. They always want to promote after a green day. But no, I'm going to promote it after a red day. Check it out in the description. Coupon code GOOGS. I really stand by the course I made. I had a lot of fun making it. I take requests from people that check out the course. There's a free 30-day money-back guarantee, so no pressure. And generally, if you're here at the end of the video, you're probably going to enjoy it, especially if you're learning things and enjoying what you see. And I'll leave it at that. Check it out in the description. Use coupon code GOOGS. Thanks for tuning in. Hopefully you learned something new on my day trading red day. And instead of Weenie Trades, I should maybe call myself Many Trades. Alrighty. Bye-bye. Peace.